Welcome back to the channel. Today is 12th of February 2022. It's a rough week. The week ended in red. The S&P, Dow Jones and Nasdaq all in red. The inflation, the US CPI rose to about 7.5, which is the highest in 40 years. It is nowhere to run. You cannot run anywhere. The 10 years treasury yield rose to about 2%, while the 2 years rose to about 1.5. You know what that tells you? That's a sign of recession. However, we are not there yet. It is rough in the market. The inflation is the highest in 40 years, 7.5, the US CPI. Would Russia invade Ukraine? The US is standing by. The energy sector is the only sector going higher. The real estate is down. Utilities are down. The financials are lukewarm. Where do you want to go? Now, we might be looking at $120 per barrel if Russia eventually invade Ukraine. Where do you want to go? The S&P 500 has lost about 4% down this week. The Nasdaq about 5% down. Dow Jones about 3.5%. We are not out of the wood. The equity market is not friendly at the moment. Let's have a look at all the charts. Let's have a look at the FANG stocks, where they are. They're not looking good. They're mostly trading below 200-day moving average. Facebook is going down. Investors are running away from Facebook. Alphabet, it might be a buying opportunity. You never can tell. Others, Tesla is below 900. We might be looking at below 800 for Tesla. Maybe about 790 or 780. It is possible. The equity market is not friendly. It's a choppy market. Year 2022 is a choppy market.
At Nasdaq, as you can see, we are trading below 200-day moving average on Nasdaq, comfortably trading below 200 moving average on a daily chart. This is significant. It just tells you that, look, we are still in the wood. We're not out of it yet. The 2-year treasury yield rose to about 1.6, while 10 years was rose to about 2%. Look, that's a sign of recession. That's a sign of things are not going in the right direction for now. So what we need to be looking at is, see, when we start trading above 200-day moving average, above 20-day moving average. But for now, when we look at the weekly chart, this is weekly chart for Nasdaq. Look at it. We are almost back to 3 weeks ago, or in January. This is where we are now. The correction, we had the correction in January, and it went as low as about 18%. We're not there yet, but we're close to it. So it tells you we are still definitely battling with all the indices, all the economic inflation, treasury yield is rising, balance sheet, interest rate hiking. It might even be up to 7 this year. Let me quickly look at the S&P 500. The S&P 500 and the Nasdaq move in the same direction often. They move in the same direction. They move in the same direction. We are here, guys. We are here. We're not out of the wood. This is the weekly chart. Let's go on a daily chart. On a daily chart, we can clearly see that we are below 200-day moving average on S&P 500 as well. Let me draw here. This might just serve as a resistance. And as long as we still have this here, it means we're comfortably under 200-day moving average. This is not where you want to be. Nothing good happens on that 200 trading on that 200-day moving average. Let's look at Nasdaq Composite 100. I mean, Nasdaq 100. Nasdaq 100 is just similar to the composite. Look at it. It's the same. Trading below 200-day moving average. In fact, the 20-day moving average is standing as resistance here. Resistance here. The other day, I mentioned that there was a gap, and the gap has to be filled. The gap has been filled. It has been filled, guys. Can you go back here and check? It has been filled. The gap has been filled. It has been filled. Look at the gap. It has been filled. This is what I said. Sometimes when it gaps up like that, it's not really in your interest because the gap has been filled, would be filled. It means that it would come back and fill the gap. This was so quick. Anyway, let's quickly look at some other FANG stocks. We can start with Amazon. Amazon started the week um, about 3,261. Amazon ended the week here. It's actually a support line here. It ended the week as at 3,065. There's a gap here too on Amazon, guys. This gap has to be filled. The gap was upward gap, so this gap has to be filled down. So for those who want to have Amazon with their position, be cautious. Yeah, you might still have the chance to get Amazon at around 2,861, 2,861, somewhere here. You can get Amazon there, very likely to get Amazon at that position. Can we quickly look at Alphabet? Alphabet did phenomenal with their earnings. However, what we are seeing here, Alphabet is below 200-day moving average. Guys, be positive about this. This is a buying opportunity. The only good thing you can do below 200 when you're trading below 200 moving average is a buying opportunity to buy. For Amazon, it is not downward trading. So I would not say we're looking at something catastrophic or so, but this is a buying opportunity for Alphabet, and Alphabet is sitting on a support. Alphabet is sitting on a support. Guys, we are not out yet. Netflix. Let's have a look at Netflix. Netflix is part of the FANG stock. Netflix. Netflix is trading down. This is no doubt about it. It's trading down, it's downward trading. Now, we are actually below 20-day moving average here. We are below 250. For Netflix, Netflix is the only one that I've seen that I don't have that confidence that it might have done sooner than I expected. With what we can see, it's downward trading. Let's look at Microsoft. Microsoft is not part of it, but it's one of those stocks that you cannot push on aside. Microsoft is loading. We're expecting Microsoft to come up. Microsoft. The 200-day moving average is sitting as support for Microsoft. It's acting as support here. So this is a good buying opportunity for Microsoft. However, it will still come down as low as 272. We saw that about 2 weeks, about 3 or more weeks ago. That was in January. We saw that it will still come back here. There's a possibility. We are not out of the wood yet, guys. Can we look at Meta? Oh gosh, Meta is down. We know that. We all know that it's been a buying opportunity. However, you need to be cautious on Meta. A lot of information. The earnings, the earnings guidance is not impressive at all. It's not impressive. The earnings guidance is not impressive. The fundamentals are not right at the moment. A lot of competitors, even Pinterest, um, Snapchat, TikTok, Alphabet, even Apple itself, they're all competitors with Microsoft. Microsoft is the metaverse. I just read somewhere this morning that they will explain, detail their own stuff on the metaverse, which just tells you that they haven't done the right thing all this while. Anyway, if they are just going there for their own stuff, when you look at this gap, see this gap, the gap down. I hope this gap will be filled sooner than later. Yes, gap down, so he will fill this gap back up. But for now, Facebook, all you can do, Facebook is take a buying opportunity. Be cautious, guys. Be cautious because it could still go further down. I have Facebook on my personal portfolio, and we have it in our fund at Elite Pro. We've added to our position. I've added to my position, but be cautious, guys. Do your valuation. Be on top of information on Meta. Meta is below 200-day moving average, and it's not looking upward at all. You can also look at semiconductor. Sorry, guys. Let's look at semiconductor industry. The the semiconductors are also down, trading below 200-day moving average. Okay, yes, below 20-day moving average for now. It is sitting on a support, and this is a significant support. This is a huge support. What I mean by that is that it has been here multiple times, and here he broke it down. It's been here again, and it broke it down here, but it's back. So this is a significant support. However, you have many layers of support here for semiconductor. You have another layer here of resistance, which can also serve as support. You have another one here, guys. The way the market is now, the market we are in this 2022 is a choppy market. It is a choppy market. You get you need to reduce your expectation of return. This year, you might just have to do that. We also look at Adobe. Adobe is one of my is in my portfolio. Adobe is trending down. Adobe is trading below 20-day moving average. Below 20-day moving average. Adobe is sitting on a support now. Whether the support will be broken, it is broken already. But we wait till market open next week to see if it will get a bullish signal. For now, it is down. It is down. We can also have a look at some other um, some other stock that we. Let's have a look at Anseng. Anseng has been trending down since last year. It is it is downward trending since last year. Since last year, it has been trending down. Yes, be, below 50-day moving average. Below 50-day moving average. Let's have a look at the VIX. The VIX. The VIX is as high as 2027. What do you expect? The market, you know, VIX is mostly doing opposite what the market. When the market is down, the VIX is up. The VIX is as high as 27, 27. And once you see VIX buzzing up, you expected the S&P 500 and Nasdaq, the market being red, red. That is the VIX. Treasury yield, 5 years Treasury yield, the iShare, the iShare. This might just be a buying opportunity for the Treasury bond. iShare 20 years plus. It might just be a buying opportunity. Guys, it's across board. What we are looking at in the market is dicey. This is not the market you want to keep some return profit of about 20%, 30%, and you want to keep it till you get 50% or more. This is not the type of market. This is the market where once you get an upside and you reduce your expectation, you take profit. You take profit. It's a choppy market this year, and interest rate will be hiked about 5 or 6 to 7 times this year. The Fed, the Fed, the Fed might just be shying away from declaring that they got it wrong with saying that inflation was transitory. I don't think it was transitory at all. Look at Tesla. Tesla is coming up. Tesla is trading above 200-day moving average. Yeah, Tesla is currently sitting on a support. On support, actually, 200 moving average might just be the standing here as support for Tesla. Otherwise, we might be looking at Tesla as at 789, below 700. Guys, Tesla could go as low as below 700. Could go as low as below 800, and nothing is impossible. Nothing is.
We have seen the chart. We have seen the price action. They are mostly trading below 200-day moving average. Where do you want to go? 2 years Treasury is rising. 10 years is about 1.9. Actually, it rose more than 2%, but came back, dropped down to 1.9 something. You know what that means? It's a sign of recession. When you have 2 years going as high as 10 years, people are not seeing better future. Look, guys, it is still better to be in the equity market than to be outside with your fund, waiting on the sideline. Be careful, do your valuation, make sure these stocks are good for you to buy if you're going to buy the dip. Otherwise, take care of yourself. The market is rough. Thank you for standing by with this channel. Thank you for watching and liking our videos. Please subscribe if you haven't subscribed. We will continue to give you content that would educate you on your investment journey. Thank you. Please call again.